Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw responsive buyers active at the 75 quarter support, and from there, the market has been balancing between the 74 half to 76 half initial support zone and up to the 95.75 to 97.75 initial resistance zone for today. And that's essentially the overnight balance. Now, the bigger picture bias continues to be bearish, but we are coming off of a very exhausted and oversold condition where buyers can be active in the market. So heading into the open, we do have to have a more neutral short-term bias where if the market starts to break out above 95.75 to 97.75 on strong internals and strong upside momentum, then we have to be open to ES going up and retesting the breakdown areas from yesterday. So the 4 half level, 6 half level can quite easily be tested there. The main resistance areas are going to be 09 to 11 and 14 quarter to 16 quarter, and finally the 20 quarter, 23 quarter zone. And as the market goes higher, in the event that there is a breakout, we can still get sell side activity at the resistance zones above. The highest probability resistance zones are going to be at 14 quarter to 16 quarter and 20 quarter to 23 quarter, but even the 09 to 11 area can attract sellers and provide rotation. The only difference now is that because we're coming off of a deeply oversold condition, we just want to be a little more cautious of that fact. And also keep in mind that the market tested larger time frame support. So it wasn't just deeply oversold, but it was oversold into some larger time frame support. So if we can hold 95.75 to 97.75, or if the breakout attempt fails at 95.75 to 97.75, then we can come down and retest the pre-market support, fill the gap, 80.75 to 82.75, and perhaps buyers will be active there. We do have to be careful on buying these immediate support zones too, unless we're seeing a positive disconnect underneath the surface, unless we're seeing the Russell holding up much better than the S&P, for example, or as the market comes down, if there's really not a whole lot of momentum behind it, then we can consider looking for longs. Now, in the event that the market breaks below 74 half, that's actually where we can get better long setups. So in the event that we go down into the bigger support at 64 to 67, or the strong support at 53 to 55, those are the zones where we can get a very high probability reaction from the market, and after that the market can essentially start trading back within the overnight range. So if we are looking long, let's say at the 64 to 67 zone, or in the event that there's a stronger liquidation and we get to 53 to 55 or 57, 58, the target on the long setups there would be a move back into the 74 half to 76 half zone and possibly even higher. So the reward to risk is pretty decent at those lower support areas, in the event that we get there. So today, heading into the open, we do need to be a little more flexible, a little more nimble, simply because the market is very balanced overnight and it can really tip in either direction. The larger time frame bias continues to be bearish, and as long as ES is holding the 95.75 to 97.75 area, or like I said, if it attempts a breakout but fails, then we know that the sell side is still in control and we can go down and retest pre-market support, initial support, and possibly even those lower support areas. So there's still very good risk reward on the short side, but how the market reacts to the initial resistance zone is really going to answer the question of whether the sellers are still in firm control, whether this is still a extremely weak market where we can still get continuation beyond yesterday's lows and beyond the overnight lows. So that's yet to be seen, and that's exactly why we have to be a little bit more careful. The larger time frame bias, like I said, is not going to change even if we got a pretty decent bounce today. That's going to continue to be bearish. So any shorts taken are in alignment with that larger time frame bias, and that's an idea that has been working out really well since the beginning of the year. anytime you're getting good location in alignment with the larger time frame bias on the short side, those trades have been very good and very high reward to risk. So the 95.75 to 97.75 area is a zone that can be considered on the short side, as long as we're not getting very strong upside momentum, or you may want to wait for failure there and then start positioning on the short side. So those are the main ideas heading into the open. Let's see which side really takes over off the open here. Just keep an eye on the underlying momentum. Keep an eye on the NYSE tick, the Russell, to see whether we're getting a response there. And if we are getting outsized momentum to the upside or downside, then we'll have to be careful fading that momentum. That's all. And if we are going to fade it, then we have to get ideal trade location. So those are our main thoughts. Let's see which side takes over, and we'll take it from there.